Welcome to the Q2 and H1FY26 earnings presentation of Yatharth Hospital and Trauma Care Services Limited. In this video, we'll walk you through the latest financial results, operational highlights, and strategic milestones that have shaped the company's impressive journey this quarter. From robust revenue growth to clinical excellence, Yatharth continues to strengthen its position as a leading super specialty hospital group in North India. Let's dive into the key developments, financial performance, and the vision driving the company forward. Before we proceed, please note that certain statements in this presentation are forward-looking and subject to risks and uncertainties. These projections are based on current management views and do not guarantee future performance. Factors such as economic conditions, competition, and technological changes can impact actual results. The company assumes no obligation to update these statements, and third-party projections are not endorsed by Yatharth. With this in mind, let's move on to the highlights of the quarter. Yatharth Hospital delivered a strong performance in Q2 and H1FY26. Key metrics such as ARPOB, occupancy, and revenue saw significant year-on-year growth. The company's focus on operational efficiency and clinical excellence has resulted in improved profitability and patient outcomes. This quarter also marked important milestones in governance, stakeholder trust, and expansion, setting the stage for sustained growth in the coming period. Q2FY26, Yatharth reported an ARPOB of Rs. 32,015, up 4% year-on-year, and an occupancy rate of 66%, a 6% increase. Revenue reached Rs. 2,794 million, marking a 28% growth, while consolidated EBITDA stood at Rs. 645 million, up 18%. PAT rose by 33% to Rs. 413 million. The company's bed capacity now exceeds 2,550, reflecting ongoing expansion. These results underscore the effectiveness of Yatharth's strategic initiatives and operational discipline. The first half of FY26, Yatharth maintained its growth momentum. Occupancy remained at 66% with ARPOB at Rs. 32,196, both up 6% year-on-year. Operational beds stood at 2,305. Consolidated EBITDA reached Rs. 1,290 million, a 19% increase, and PAT grew by 36% to Rs. 833 million. The company's margin performance also improved, reflecting strong cost management and revenue optimization across its hospital network. Yatharth Hospital has taken significant steps to strengthen its governance framework this quarter. The appointment of Mr. Ramesh Krishnan as independent director and MSKA and Associates as statutory auditor, alongside Deloitte as internal auditor, enhances transparency and accountability. These measures reinforce the company's commitment to best practices in corporate governance, ensuring robust oversight as the organization continues to grow. This quarter, Yatharth received a favorable order on a pending income tax matter, leading to the release of all provisionally attached properties and fixed deposits. The company was also included in the MSCI India Small Cap Index, increasing its visibility among global investors. Additionally, CRISIL upgraded Yatharth's credit rating to A stable, reflecting improved business prospects and risk profile. These achievements further inspire trust among stakeholders and investors. Major highlight this quarter was the acquisition of a well-established multi-specialty hospital in Agra. The facility, built across 165,000 sq.ft., with a current capacity of 150 beds expandable to 250, was acquired for Rs. 260 crore. Strategically located on NH19, it serves underpenetrated regions and will act as a feeder for oncology and organ transplant services. The integration is expected to contribute meaningfully to revenue and EBITDA from day one. Yatharth's financial performance this quarter was marked by robust revenue and profit growth. Revenue increased by 28% year-on-year to Rs. 2,794 million, while EBITDA rose by 18% to Rs. 645 million. PAT saw a 33% jump, reaching Rs. 413 million. These results reflect the company's ability to drive operational efficiencies, expand its service offerings, and maintain a healthy financial position even as it invests in new facilities. Operational metrics continue to improve across the board. ARPOB and ALOS both showed positive trends, while bed capacity and occupancy rates increased. The company's focus on optimizing clinical parameters and expanding capacity has translated into higher patient volumes and better utilization of resources. These improvements are key drivers of Yatharth's sustained growth and profitability. Yatharth has successfully diversified its revenue streams across hospitals and specialties. New hospitals led the growth momentum, with Greater Faridabad contributing 10% to group revenue within its first year. Mature hospitals also sustained strong growth. The company's strategy of expanding high-value specialties such as oncology and organ transplants is driving ARPOB and overall revenue upwards. Quarter saw significant expansion in bed capacity, with the inauguration of Model Town, New Delhi, and Faridabad facilities, adding a combined 700 beds. Oncology emerged as a key revenue driver, contributing 10% to group revenues. The company's focus on enhancing super specialties and improving occupancy rates across both mature and new hospitals is yielding strong results, positioning Yatharth for continued leadership in the sector. Yatharth's commitment to clinical excellence was recognized with several prestigious awards this quarter. The group received the Radio City Health Icon Award for Excellence in Healthcare Innovation and Transformative Leadership, as well as ET Health Awards for Clinical Excellence and Innovation in North India. These accolades underscore the company's dedication to quality, patient safety, and transformative healthcare delivery. Profit and loss summary for Q2 FY26 highlights strong operational leverage. Revenue from operations grew by 28% year-on-year, while medical consumables, employee expenses, and other costs were managed efficiently. EBITDA margin stood at 23.1%, and PAT margin improved to 14.8%. These results reflect disciplined financial management and the ability to scale profitably as the company expands. Yatharth's balance sheet remains robust, with total assets rising to Rs. 18,563 million as of September 2025. The company has maintained a healthy equity base and strong cash position, even as it invests in new facilities and technology. Prudent management of borrowings and liabilities ensures financial flexibility for future growth and expansion initiatives. Yatharth is now one of the fastest expanding hospital networks in North India, with over 2,550 beds across multiple locations. The group operates 8 hospitals, including recent additions in Agra, Faridabad, and New Delhi. All facilities are NABH accredited, with Noida Extension also receiving JCI accreditation. This extensive network enables the company to serve a diverse patient base and deliver comprehensive healthcare solutions. Tracing its journey from incorporation in 2008, Yatharth has consistently expanded its footprint through greenfield and brownfield projects. Key milestones include the establishment of major hospitals in Noida, Greater Noida, and Noida Extension, strategic acquisitions in Jhansi Orchha and Agra, and successful listing on NSE and BSE. This growth trajectory is supported by a clear vision and strong execution capabilities. Yatharth is backed by marquee investors, including major mutual funds and international institutions. The company's stock has delivered strong returns since listing and is now part of the MSCI India Small Cap Index. With a focus on shareholder value, Yatharth maintains transparent reporting and robust governance, attracting continued interest from domestic and global investors. Yatharth's growth is driven by a multi-pronged strategy, adding capacity through new hospitals, optimizing existing infrastructure for higher occupancy, investing in advanced technologies and clinical talent, and tapping into medical value travel. The upcoming Jewar Airport is expected to further boost global patient inflow, supporting the company's ambition to become a leading destination for high-end medical care. Yatharth's clinical excellence is underpinned by cutting-edge infrastructure and advanced medical technologies. The group boasts Da Vinci robotic systems, Linac machines, and joint replacement robots, enabling complex procedures and minimally invasive surgeries. With a strong focus on attracting top medical talent and investing in state-of-the-art equipment, Yatharth delivers superior patient outcomes and maintains its leadership in clinical innovation. Strategically located near Jewar Airport, Yatharth is well positioned to capture opportunities in medical value travel. The company has established partnerships and information centers in countries such as Ethiopia, Mauritius, Uzbekistan, and Tajikistan. These initiatives, along with continuous engagement with government agencies and foreign hospitals, are expanding Yatharth's global footprint and attracting international patients. Yatharth has demonstrated a proven track record of consistent performance across operational and financial parameters. Key indicators such as bed capacity, occupancy, ARPOB, and EBITDA have shown steady improvement over the years. The company's disciplined approach to cost management, revenue diversification, and strategic investments has enabled it to deliver sustainable growth and value creation for all stakeholders. Summary: Yatharth Hospital and Trauma Care Services Limited has delivered another quarter of strong growth, operational excellence, and strategic expansion. With a robust governance framework, diversified revenue streams, and a clear focus on clinical innovation, the company is well positioned for future success. As Yatharth continues to expand its network and enhance its service offerings, it remains committed to delivering value to patients, investors, and all stakeholders.